What's going on, Money Morning Live? What a great session we just had there with Mark. And you got that reminder up on the screen that we have Kenny and 8Ball today at 2 o'clock talking about the Fed. So we're going to make sure that we don't miss that. But right now we have Tom Gentile coming on in with Power Profit Trades. Let's bring him in 5, 4, 3, 2.
Hey everybody, Tom Gentile. Welcome to Power Profit Trades. It is Wednesday, January 26, 2022. Big shout out to our YouTube subscribers who are joining us as well. Hey, in the next hour, we're going to go over what we're going to expect in today's Fed meeting. I know that Kenny and 8Ball will be there at 2 o'clock to be talking to you live. We also want to talk about today's big earnings movers. All right, so based off of what happened after market close yesterday and before market open today, I've got the big ones here for you. We'll take a look at what they're doing and what our expectations are for what they're going to be doing in the future. Got a strategy session for you today. We're going to talk about high probability trades to show you how to get through this highly volatile market. And of course, I've got charts by request at the bottom of the show. So, got a lot to get through today, guys. Eric, how you doing this morning?
I'm doing great, man. We got a stacked up day. We got a stacked up show. Lots to talk about. I know that you're going to start out talking about a little crypto today, which of course made me a little bit happy. So thank you.
Yes,
I know
sir.
you're doing it just to make me happy. I appreciate that. But yeah, so I'm excited for today. Let's get into it.
All right, cool. So let's talk about crypto before we go any farther. Okay, so you know what? I'm almost back to that break-even spot last Friday when I dropped 100 grand on Bitcoin. And just to remind everybody, so last Friday I did a special event, and boy, sometimes I wish I look at it, I go, wow, I wish we'd have done that on Monday when BTC was trading down there in the 35, 34 area. And in fact, even stabbed a little below that, what was it, a couple days ago. But hey, you know what? That's what happens. You got to see that live. You got to see me put some decent sized money into Bitcoin itself. I talked about that as there were several reasons why we went in and bought Bitcoin. But where has it been since today, since Friday? Well, Saturday and Sunday was not good to me, was not kind. In fact, by Monday morning, I was down better than 15% on that trade. All right, so fast forward to today and where we are. I just took a snapshot of Bitcoin before we jumped into the room, and we're trading above 38,000 here ahead of FedWatch. In fact, if you take a look at the chart, since the lows that occurred down here, and this is a closing low at 35,075. Okay, so that hit. No, back it up here. Wednesday, Tuesday, Monday, Sunday, Saturday. This is the day when I went in and did the big buy. And the big buy was somewhere up here before we started dropping even more. But there's Saturday's closing low. Since then, we've actually had 4 days of green candles. All right. You know what? The last time we had 4 days of green candles, you got to go back. You got to go back. You got to go back. I mean, look, guys, we did not have 4 days in a row of green candles since before October. So you got to get an idea of why I feel a little bit good about what's happening with cryptocurrency right now. Now, that current bar you see there, that could roll over. That could roll over and go negative because, we still have to get through the Fed decision today. So this is a big day, and I'm very curious and obviously very interested to see where that ends up going. The other thing that some of you might have noticed is we're knocking on this purple line right here. Right. So, Eric, that purple line represents the 10-day moving average. So I look at on Bitcoin, I look at 10 and 30-day moving averages. Right. A couple of the other coins, we'll flex those numbers a little bit based on their volatility. Typically, the more volatile a crypto asset is, the smaller numbers I look at when it comes to moving averages. I like to call them currency waves. But I thought I would just start out today just talking a little bit about Bitcoin and where I see the numbers going to. So we've got this 10-day moving average. We got a 30-day moving average. But the big number of resistance that I'm looking at is right here, 47,480. That's the first line that we have to cross for us to see this downtrend we've been in for the last few months become a new uptrend. 47,480, 51,312, 55,144. My big resistance numbers. We will be following these for the next several weeks. All right. So there you go, Eric. Does that help quench your thirst?
Yeah, I like that. That's something I don't typically look at, the resistant numbers. So I'm happy that you showed them. I also, the purple line. So I'm going to go back to it really quickly. What do you exactly do? You said that this candle is approaching that purple line. What does that tell us as someone that's in these assets or looking to get in or out?
Short-term moving averages, the short-term moving averages are both down. So again, this is kind of the first level of defense that we want to get above. And if you're looking at really volatile markets, and crypto is definitely one, this is definitely an area we have to cross and get above, right? And as you can see, that line's been sloping down now for months. I mean, the last time that line was moving in an upward direction, BTC was at 65,000, and we've been kind of dropping ever since. And what we'll do is next Monday, we'll talk a little bit more about what these two lines represent in terms of buying and selling indicators. But right now, I'm looking at it as a pure resistance indicator because now Bitcoin has made a bit of a move, got 4 green candles, got a bit of a move. The next thing I need to see right away is a close above that 10-day moving average. Then we'll be concentrating on the 30, and then we'll be concentrating on those big Fibonacci numbers that you see there. All right?
Thank you. Perfect. Awesome.
Let's get into what's going on in the stock market today. So, guys, we got big Fed meeting. That's coming up. And like Eric said at the bottom of the hour, that's when we start our program right here at 11:30, that Kenny and 8 Ball are going to be on to walk you through the trade reaction today. If you walk back with me and we take a look at what's going on with the S&P, I've got a different type of chart I want to show you for the entire session today. These are called probability cones. We're going to be using them closer to the top of the hour when I discuss our strategy of the day. But if you take a look at what's been going on with the S&P 500, so this is the month of January, fall. Okay, Monday had a big reversal day. We dropped down. If you remember that last couple of hours of the day, we had a huge push to take Monday to session highs. Yesterday was a big reversal, although we did get a little green candle out of that at the end of that day. Today has been a little bit different. All right, so we came into yesterday afternoon concerned about earnings, among most things. Microsoft announced. Microsoft in the aftermarket session yesterday actually was down, and then they had their call. And when they had their call, things just got better. Everything they said was the right thing, and it pushed the stock from being down yesterday afternoon, after market close, to up yesterday afternoon and today in the morning session. We'll check on Microsoft, but you know what's bothering me right now, Eric? That candle was green. We had a really nice move in the markets early this morning, and we've pulled back since then. So, as of right now, we got Dow up almost 350. We got the S&P up almost 70 points. And we got the NASDAQ up about 300. That runs into about a 1% move for the Dow, about a 1.5% move for the S&P, and about 2.25% move for the tech-heavy NASDAQ sector, which has just gotten obliterated over the month of January. So there's some short sellers right now that are covering ahead of the Fed meeting because they know what you and I both know, and that is that there is huge overall market risk in the markets. It's typically not on certain earnings days, although there's a couple stocks that can move the entire market. Microsoft looks like it did today, but everybody's eyes are now on 2 p.m. We'll get to that a little bit. So probability cones. So what these are a way of looking at the markets and looking forward, and based on the past. All right, based on not whether the stock is moving up or down in question, but the ranges that we're getting, the actual statistical ranges, the difference between the highs and lows. And we take some mathematical equations, we put those together, and that helps us go forward in terms of how much movement based on the past can we project in the future. So if you're looking at the S&P 500 and we have hit a down note, we came back and really took a stab at those lows that happened in October. And notice that it took from November to January. I mean, it took us 2 months to get from the pullbacks in October to the highs that happened last month. Only took us about 2 weeks, 2.5 weeks to drop right back down and erase what we saw going up for the last 2 months. This is the S&P 500. Now, these lines, these cones you see here, these tell us statistically the probability of where the market is likely to be in the future. So if you look in the past here, Eric, you'll see September, October, November, December, January, and then you see a zero line. A zero line is today. Where are we today? And as you can see, the cone just gets started. But if we project 20 days, 40 days, 60 days into the future, it's telling me that if we stay inside the blue cone, that the market can stay inside the blue cone, and that tells us that we could go down as low as about 415, 60 days out. We could go as high as about 462, and there's about a 68% chance that the S&P is going to be in between those numbers as we go out 60 days. This red line represents the cone that we call, it's called STD2, or standard deviation of the second power. And that is basically telling us that as this market moves up and down and sideways and trender up or trender down, that we've got a 95% chance we're going to stay inside this cone. Now, we're going to utilize this information for a session in about 15 minutes or so, and I'm going to show you exactly what I do with this info. But going forward, you can see we're getting a little bit of a bounce. We're trying to get a bounce in the S&P. I think time is going to tell whether this is going to be a significant bounce or if this is a dead cat bounce to move lower. And I believe that time is going to be sometime shortly after 2 p.m. today. So we'll see where that ends up going. The bond market, if we were to look at the bond market and get an idea of what bonds are doing, looking at this particular strategy, let's take a look at TLT. So where is the bond market likely to sit? Bond market's been, as you can tell, has been in a box. And that box has been really from the low 140s to the high of 155. We see that as well. And so by looking at both the lows and highs, notice the cone. It is not as wide as the SPY, but it does. I mean, that 95% cone does take us up above the highs that we've seen for the year, and very quickly below those lows, and even quite a bit lower to the downside. So if the Fed raises rates and raises rates even faster than we expect them to, or greater than we expect them to, I would expect this TLT to move down, but 95% chance we're going to stay inside this cone as we move further out. All right, so that's what we see there too. A couple more. Let's look at USO, the oil markets. Oil's been on fire. Again, we're about to hit new highs for new multi-year highs with USO trading at around 61.59. And as you can see, the cone pushes it up as high as 82 going out 60 days, and as low, if we were to take the pullback, as low as just around the $48, $49 area. So, if I were looking at a bullish move in oil, which I believe that we're about to come into a bullish seasonal pattern, perhaps I might look at high probability strategies where if oil comes down, as long as it doesn't drop down below 50, I would look pretty good. We're going to talk about that strategy next. Okay. And finally, let's look at GLD. So GLD, again, the pattern I see here, higher lows. I don't see higher highs though. I see us hitting a resistance area right where we are. It looks like we've come, we've jumped above the 171 area, which was resistance. Now resistance becomes support. And so this is the line, this is the area that we need to hold. We're right now at 171.19 on GLD. 171 roughly is that area of support. If we hold that line, then I believe we will see ourselves above 175 heading into the high 170s. Again, just like every chart I've shown you guys, time will tell. All right, so I'm going to reset us back up here, Eric, because you know what I need to talk about next?
What's next?
Well, we need to start getting into some of these aftermarket earnings things, announcements we've seen. We saw earnings come out. We saw announcements come out for earnings. I'm going to reset our charts to roughly about 90 days. Now, you're going to see a little bit of the difference here on my charts. So S&P roll over. Bonds look like they're in a downtrend. USO obviously still looks like it's in an uptrend. GLD is looking like it does have lower lows, trying to make a lower high. But, guys, we got to talk about earnings. We got post reactions today. All right. I want to talk about the big ones. Yes, we're in the sweet spot where we're going to see a lot, hundreds of companies reporting earnings this week and next. But the big ones I want to talk about, obviously, we got to start with Microsoft. That was the big kicker yesterday afternoon. I want to talk about AT&T. I want to talk about Boeing, Texas Instruments, FFIV. These are the ones that I want to talk about, and I want to talk about the moves that have happened. We're going to take a look and see if we can get an idea of momentum. All right, so quick question for the room right now. I got two questions I want to pose to you today between now and 12:30. The first one is this, all right? How many of you out there are looking at earnings and you believe this quarterly earnings is going to drive the overall market higher, all right, from this point forward? And how many of you out there expect the rest of the earnings season to push the overall markets lower? So type it in, put it in the chat box. Let's take a look and see what you've got, whether you're with me on Monday Morning Live or YouTube. Give me an idea, higher or lower. Those are the two words I'm looking for. Bullish or bearish. Utilize either one of those. Eric, what's coming in? What are people saying?
Honestly, Tom, I'm watching it scroll right now, and it looks like they're split. We have about 50-50. Half people are saying lower, half of them are saying higher. How do you feel about it? Where do you sit?
Well, guess what? That's what makes a market.
Yeah, you're right.
When you got buyers and sellers, when you got bullish people and bearish people, and we've got them all over the room here. I have to look at this, and I think that I'll kind of go back to the way I look at earnings. The earnings markets, we typically see the first 2 weeks stronger and the last 2 weeks are weaker. But what's been going on is we've seen a reverse course. And a lot of that's because of, we'll start it out with COVID. We'll start it out with stay-at-home stocks, in favor and then out of favor. Rebound stocks out of favor, back in favor. So what I've got to look at is I really believe that through the rest of this week, we might see more nervousness. And part of that might be the Fed. But I believe that coming into February, those stocks, those retail stocks, those get out and, see the world again stocks, I think they're going to have a little bit of surprises. Some of them are not going to miss as much. And I think we might start to see those stocks, kind of come into play. And I'm talking about, I've got a list of some of them here on one of my other screens. Let me see if I can grab them real quick. These are some kind of weird ones, if you will, but I'm going to throw them out there for you guys. Airbnb is an example of one. Airbnb has absolutely been kicking it. And so, things like that, DoorDash, I'm thinking of the ones that, I think, have been getting killed, but now could be that catch a falling knife. And again, I'm going to show you a strategy in a few minutes of exactly how we can look at those type of moves. The Airbnbs, the DoorDashes, the Etsy's of the world. Some of these are, again, those were COVIDs that except your Airbnb. Airbnb was oh my gosh, no one's going to come and rent my resort home anymore, to, wow, it's doing a lot better than I thought. And that's what's happening with Airbnb. But you take the Etsy's and you take, for instance, DoorDash. These were those temporaries that have become permanent fixtures in our lives. What I mean by that is that, let's just take case in point my wife for a second, Eric. My wife, if she never left the house again, she'd be happy. I mean, all of a sudden now deliveries come. I have to climb over boxes sometimes when I get through the front door, because there's Chewy boxes there. There's Amazon boxes there. There's Walmart boxes there. Etsy boxes are there. And then, of course, you got DoorDash, you got Instacart, you've got actual companies themselves that are delivering food. It's like, and I can't be the only family doing this.
It's the same in my house, Tom.
It was, yeah, I mean, I got to drag my wife out of the house just to go somewhere. But the thing is that what we all thought last year, which was going to be a kind of a temporary thing, is now becoming permanent. I mean, we're seeing more and more people almost adopting a hermit philosophy, where now they have their goods and services come to them instead of vice versa. Um, I could go down the rabbit hole and talk about why I think that's a good thing and why I think it's a bad thing, but let's stick with the stocks. And that I believe that these stocks, which have been taken to the woodshed, may end up coming back because people are going to see them as permanent fixtures. All right, I got away from what I wanted to talk about, so I apologize for that. But let's start with Microsoft. So I've got Microsoft on here, and you can see what Microsoft's done in the last 90 days. Bottoms. We see the bottoms formed on Microsoft around the 280 level. Now, I got to tell you, last night when I was looking at this, Microsoft stabbed down to about 269, and then it jumped right back up very quickly. As you can see, it opened around the it actually opened above, very close to 308, and it's pulled back down. 308.50 was the high. It's pulled down. We've seen a pullback. So what's happening is all of this excitement around Microsoft has now subsided, Eric, because it's kind of like, okay, Microsoft's had good earnings, Fed meeting. That's what's going on in the world right now, trading. Had good earnings. Let's get out of the way. Let's sell that little move. Fed meeting. So that's what's happening with Microsoft. AT&T had a good morning, and all of a sudden now we're back to Fed meeting. Opened up here around its high, which was $26.98, close to 27. Better than expected earnings. Pull back down. The low was 25.62. We're trading right now, or 25.40. We're trading around 25.62 off those highs of the morning. So we got two big stocks that had good earnings, and yet the Fed, the concern of Fed meeting or sell that opening gap has been happening. Boeing, same thing. Now, Boeing had missed. They had an earnings miss this morning, but they did open higher and have dropped down. So we're seeing, right now, I'm seeing a lot of outside candles. An outside candle is a candle where the high and the low of today is greater than both the high and the low of yesterday. Or is this setting up for the next big volatile move? Possibly. Let's look at our next chart. This is Texas Instruments. Now, Texas Instruments had a good earnings report, and it did gap. All right, so if you look at yesterday's close was below 175. Today's open was at 182. High was 183.25, and right now we're trading around 181.33. So, red candle, again, you can see, I'm going to blow it up here for you. You can see that jump up. Now, this is not an outside candle. The only way this becomes an outside candle, Eric, is if the low comes down and goes below yesterday's low. I don't think that's going to happen unless we have something that comes out of the Fed that just scares the hell out of everybody. Right now, that looks like a low probability event for Texas Instruments. Next, FFIV, okay? And this is where we end the big numbers or the big earnings. And this one did the exact opposite of Texas Instrument. Had good earnings. Outlook didn't look so hot. So we're coming down and we're testing those lows that happened back in October. And if you come in here, you can see, yesterday's close, down here today's open, big range. All right. So what do you do with a stock like an F5 Networks where we gap down really hard, or the one I just showed you before, all right, Texas Instruments, where we actually gap up? Is there a tradable action that can be had here? All right, so yesterday, if you guys were joining me, we were talking about surge strikes. And one of the things that we are going to be looking at is how much volume came into this gap move. So we're going to come down. We're going to see that as of right now, so far this morning, we've had a bit of an up move, but it hasn't been like everybody running for the door. This isn't a run for the door event yet, at least right now for F5. But by the time we get into today's close, we might see a lot more volume tacked on. And if we see a lot of running for the door, it could be setting up for a momentum trade. Will it be bullish? Will it be bearish? I don't know, okay? And I don't really care. What I do care about is I care about what the price action looks like, not even today, tomorrow, the next day, next week, and that'll help me determine whether we're going to be bullish or bearish. Those of you that are part of Surge Strike, well, you'll get an idea of whether we have something on this and or other trades as we move forward in the future. As far as the rest of earnings, I mean, what are we going to be looking at, Eric? We'll be looking at AMD. We're going to be looking at Meta. That's going to be coming out soon. Qualcomm, Exxon. These all report next week. And so I just want to show you a few of these that if we were to talk about what they all have in common, it is overinflated volatility, right? So one more look at FFIV, and I'm actually going to put a 7 to 30 day at the money implied volatility. Basically, what are the options doing? All right, that's the options for FFIV. If we were to add that to the stock, it's going to look like this, Eric. You're going to see a stock price going down. All right, this is SPY, and then you're going to see the implied volatility going higher. SPY tells us that this is happening for most stocks. But if I go back and I look at, so for instance, FFIV was super high yesterday. Earnings are out. Now it's dropping. Okay. Same thing with Texas Instruments. Big IV yesterday, big drop today. And I think that drop's going to continue, but not until after the Fed meeting. Okay. Boeing, same thing. Look over here to the far right side. You can see IV up, earnings out, IV down. So right now we're seeing IV up for those AMDs, Metas, Qualcomms, Exxons. Once they report, you get that out of the way, then those options are going to get a little bit cheaper. So, Eric, are you ready?
I'm ready. I'm ready to move on to some strategy. I've also been grabbing people's questions from the chat. I asked you guys to throw questions out there. I'm pulling them for later on in the show. So just making sure that we're prepared. But let's move on into the strategy session, Tom, and take it away.
Yeah, absolutely. So I want to talk about, we're going to get into expensive options. We're going to get into strategy session. And today's strategy I want to talk about, let's call it being brought to you by Rocket Wealth. All right. Rocket Wealth, the best publication that's out there among all of not only my publications, but I believe every publication that exists. Last year, we had a 93% win rate. This is basically track record, 93% win rate, 70 winning trades. We had 5 losers. Fantastic. And I want to show you exactly how we do that here, guys. Next, we'll get back to the performance, individual performance on this a little bit. But I've been talking about probabilities, and I've been showing you things on a graph as statistical probabilities. So if you've joined me, and I do this on Wednesdays, we talk about statistical probabilities, and it all starts with a coin flip, all right? So a coin flip. Coin flips determine a lot of outcomes, don't they? They determine, I got to tell you, I mean, they determined, in some cases, controversial coin flips determine the event or the outcome of some of last weekend's football games. In fact, I think I remember, Eric, there was an overtime that went in on one of the playoffs, where there was a coin flip and the game was practically over just after that. And the other team that did not get the coin flip in their favor was like, wait a minute, we should get a chance. We should get a chance in overtime, but that did not work. So
not how the rules work in the NFL these days. Nope. Good game, by the way.
Yeah. Absolutely. and I mean, look at coin flips to determine the beginning of these games. Coin flips can determine things, in our family life. Hey, who's gonna get that last piece of cake? I'll flip you for it. That's another way to do it too. But outside of one-off flips, which is what we're talking about now, in order to make a flip work in your favor, you need to have multiple flips. For instance, if I'm flipping a heads or tails coin on one flip, that's a 50-50 chance that could, and if we're talking about, Eric, if you and I are putting $100,000 down on one flip, that could change our lives for the better or the worse. You could actually double up on your 100, or you could be out 100. Mm-hmm. That's a one flip situation. But if you and I were flipping coins and we were betting $100,000 on each and every flip, and we flipped 100 different times, do you know that more than likely we're going to end up with the same amount of money that we started with? Because
makes sense.
As you flip more and more, the mean reversion properties of the fact that you have a 50% heads and a 50% tails event that can happen. The more you do that over time, the more you end up right there where you began. So how does that affect the stock market? If you take a look at the stock market on any given day, no matter whether you're a technical trader, a fundamental trader, a seasonal trader, if you're looking at an event that starts today and ends tomorrow, you'll find over time that that the coin flip will give you a 50% up day or a 50% down day every day. We had a guy, and I got to go back quite a bit here, like decades back here, Eric. So I ran this little company called Optionetics long ago. Co-ran it with a partner of mine. And he was the Lone Ranger. I was the Tonto in Optionetics. Let's get that straight. Anyway, so on our discussion boards, we had this guy that came in every day, and all he did was a coin flip to determine whether he was going to be bullish or bearish. And over years, he did this. And it wasn't how bullish or how bearish. All he was flipping on was where the market was going to end that day. And, he was close. He was in the 50 percentile area, I think 55% or so. So he didn't, his winning strategy wasn't 90 or 100%, but he was just flipping coins. Now, I want to take you to an area where you get to the 90%. And to get to the 90% means that we can use the same coin flipping statistical probabilities. But yet, what we'll do is we'll trade way outside of the coin flip, which means, what I have on the screen here. So statistical probabilities of stock being higher or lower by a certain date or like a roll of the dice. And what I mean by higher or lower is not being above 50 or below 50, but being above 75 or below 75 with the stock price at 50. All right. So over time, think about this. If this was a good stock, it might be above 75, but fundamentals might take it years to get above 75. But if a stock is at 50, will it be above 75 30 days from now? Will it be below 25 by 30 days from now? If the stock's at 50 and I've got an area above 75 and above 25, there's a high probability if the stock's is at 50 today, it's going to be above 25 sometime in the future because it's already above 25. So we can take this information and we could create option strategies that give us a statistical probability of being right. Okay. Now, there's a trade-off for that. And the trade-off for that is that with high probability comes higher risk, right? Who saw the new Spider-Man movie that came out? No Way Home. I thought that was a very cool movie. I did. There were parts of it I liked. There was parts of it I didn't like. It almost felt to me like almost like a B-rated movie. It didn't seem as Marvel-esque as the other Marvel movies I've seen. Maybe because Robert Downey Jr. isn't part of the franchise anymore. But it was kind of cool having the old Spider-Mans connect with the new Spider-Man. Spoiler alert. Sorry. But it was kind of cool. And the one thing that kept coming up in there, Eric, that I really I kept poking my wife saying, he's going to say it. With great power comes great responsibility. And I like to say, with great probability comes greater risk. You have to know that going in. So one of the strategies that we use, Eric, to accomplish such a great return and such a great track record with our alert service, which is Rocket Wealth, is something called selling puts. And selling puts step by step works like this. When you buy a put, you are bearish on the overall asset. Someone's selling that put to you. Someone's taking the exact opposite side of every option trade that you and I take. So they're equally convinced that you're wrong and they're right. All right. If someone's buying a put that I'm selling, they're bearish and I'm bullish. How bearish are they? Well, if I'm selling out of the money puts, they got to be very, very, very bearish. I don't even have to be bullish. I could be bullish. I could be neutral. I could be slightly bearish and still make money on this particular trade. So it involves something like this. Let's say that XYZ is a stock and it's trading at 125. And I like the stock at 100. Maybe I like the stock at 100. Maybe I believe the stock's not going to go below 100. So what I could do to A, bring in some premium, and B, set myself up to buy the stock at 100, possibly, is to sell the XYZ September 100 put. This is an example. And maybe I'll get 10 points for it. All right, what that does is that obligates me to buy 100 shares of XYZ per contract at $100 a share, but I'm getting $10 premium for that obligation. So what is the risk? What is the reward? What is the break even? Think about this for a moment, folks. If you're going to buy XYZ and it's trading at $125 a share today, what's your risk? It's what you put out there on the stock. It's $125. What's your reward? Unlimited. What's your break even? It's where you bought the stock. But when you do this strategy, it changes a few things. Number one, what's your risk? Well, your risk, if you're obligating yourself to buy this at 100, is $100 minus what you pay you brought in. So my risk on this trade is 90 compared to a stock trader who has a risk of 125. What is my reward on this trade? That's a very interesting question. Here's the answer. A lot of people say, oh, it's just what you brought in on the trade. Maybe. Because what if the stock comes down below 100 and I get obligated, somebody ends up exercising that put, and I'm assigned the stock? Now what's my reward? The same as the stock trader. Unlimited. All right, so I want you to think about that in two different areas. What's my break even? My break even is strike price minus what I brought in. So 100 minus 10 is 90. What is the break even again for the person that bought the stock when it was at 125? That's right, 125. Okay, so I look at this cash secured put selling as a way of buying first class stocks at below market prices and getting paid to do it. I mean, what's better than that for a longer term strategy? This is not what I call a trading strategy, but it's also not an investing strategy. It's a medium-term income building strategy. And those of you that are part of my Rocket Wealth service, guess what? You know exactly what I'm talking about. We've been doing this since the pandemic started, and we have a small handful of losses compared to the amount of wins that we had. In fact, in 2020, coming into 2021, we were batting 1,000. We did not have a losing trade. All right, we did not have a losing trade well past 1 year, or past into the last year before we actually started. We had a loser, right? Actually ended up with 5 losers for 2021. That's fine because we had 70 winners for 2021. And Eric, you know what? I think I want to show everybody ways they can spot these stocks like us. And I'm even going to show everybody the trade we did because it's performing so well. I want to show the trade that we did too. So ways that we can spot, these high volatility instruments. Well, some of you know that we offer a free app out there in the community. It's called Tom's Option Tools app, available on the iPhone and Android devices. Right? You can go do a search on Tom's Option Tools and follow the bouncing ball. Part of that is something we call expensive IV. And if you look at, this was that came into the morning report today, Eric. So I want you to step back and remember yesterday. Remember the drop we had again yesterday. Remember all of the moves, the volatility we had both on Monday and yesterday. We had a lot of movement, and that pushed stuff like the SPY to 1-year highs. The Qs, there's AT&T. That's because of the earnings that came out. AMD is a little bit of both. NVIDIA's on here. Microsoft was mostly earnings. Intel's got earnings coming out as well. But we're seeing a lot of stuff that we haven't seen in a long time hit this list. So there's a lot of expensive optionable stocks out there. But we picked one that we thought was not only expensive, but it is definitely a first-class stock. And that stock was John Deere, symbol DE. So what you see on the screen right now is a chart of John Deere. All right, I've took John Deere back to Labor Day. You can see the high at 391. You can see the low that came down here around 325. And then you can see it kind of moving along its range. It had come up to this area, which was its high. We picked this now. I pulled the chart of today, but we had this trade go out 2 days ago. So you're talking about down in this area here. When we were down into the 350s, all right? That was just on Monday. We saw that trade coming in around the 350s. We got an earnings report that's coming out in 23 days. That doesn't bother us. Earnings reports do not bother us so much on first-class stocks. So I'm going to take you through what we did here. All right. So again, number one is with everything I talk about is spot the opportunity, whether it's in stocks or it's in crypto. Second thing I look at is I look at creating a low risk and or high probability trade. Okay. Now I said and or here. Okay. Because I want to just mention this for a second, Eric. Can you create a high probability trade that also has low risk? You know, because I just said with great probability comes greater risk. Well, we can actually create both. All right, I'm going to show you the high IV trade that we did. But those of you that are Rocket Wealth members, join me at 1 o'clock. All right, Jeff and I are going to go over a strategy session with you, and we're also going to show you how to make this a low cost, lower risk. So lower cost, lower risk, same probability. All right, we'll show you how to do that just by doing a little bit of a tweak with what we do. All right, so again, back to John Deere. Let's pop on over. I've got a John Deere chart here right here in front of me. And as you can see, these probability cones, what we do is we look at where the stock has been, right? And obviously our software does that as well. And our software is giving us a projection, a future projection, which says that 68% of the time, John Deere is going to fall into going out 40 to 60 days, really going to stay near those lows that we've seen, but it does have some upside that could take us to new highs. Same thing with the 95% cone. Way nice upside move. We could see a move to the downside that could take us down below these lows and really kind of as low as about 300. So where's John Deere at right now? All right, as of this chart, is trading just south of 370. How'd you like to own it at 300 if we're at 370? What's 300? 300 is about 25% off, okay? And, you know, I talk about this often. If you're walking into your favorite store, or if you're like my wife, if you're shopping around your favorite internet site and you all of a sudden see those shoes or that shirt or that pair of pants that you've looked at before and all of a sudden it's 25% off, you might hit the buy button. I'm going to show you how to hit the buy button right now on John Deere, or how we hit the buy button on John Deere Monday for a 25% off sale. The way we did that was through cash secured put selling. So as I'm looking at John Deere, and we're going out looking at the March options. This is not a weekly trade. This is not a monthly trade. For us to create high probability trades on first class stocks and really have the ability to get some fantastic buying opportunities at them, we're going out into that 30 to 60 to potentially 90 days. So we're really kind of going out there a little bit farther to bring in as much juice as we can and get close to that red line curve. What we did, folks, was we looked at the 300 puts for John Deere. The 300 puts for March 18th, right? They closed at $3.60 on Monday. So I want to show you a couple things here, all right? What does this do? This obligates us to buy John Deere, all right, between now and March 18th at a price of 300. I'm fine with that because John Deere was trading in the 360s. That was on Monday. All right. Now, let me show you how this graph sets up. So the graph sets up like this. All right. What are we doing? We are selling to open the 300 puts for 360. Right. They were bid 340, offered 380 at the close. A couple things I want to show you. All right. This is a chart of John Deere, and these are Bollinger Bands. So we have Bollinger Bands on John Deere, and we have that first standard deviation band, and we have the second standard deviation band. We know we got earnings in 25 days, and this is what the curve looks like. If John Deere stays right here, well, I'm going to have to take my $3.60 or $360 for the payday and keep it, put it in my pocket. Even if John Deere comes down to 300 by March 18th, that option is going to expire worthless. I'm not going to get the stock, but I am going to keep the payday. If John Deere comes below 300, then I will get the stock at 300, but I will also keep the payday. In all three events, I still keep the payday. What's the probability of this being profitable, of this strategy being profitable? Well, down here, I've got some probability stuff I want to show you. All right, these are statistical probabilities. And we look at things like days to expiration, probability of profit, maximum risk, which is if the stock went to zero, and then what we'd like to call percent to half. And this is something we'll be talking about at 1 o'clock today, guys, those of you that are part of our Rocket Wealth Initiative team. 96.2% probability of profit on this particular trade. That's why I like it. That's why I like it, Eric. And so last thing coming here. How are we doing on this trade? Because this was Monday. Let's push this forward to today and take a look at what's doing today. Oh, wow. So what this tells me, Eric, is that of the $360 payday right now, if I were to buy this back, I would keep 118. So I've actually brought in a third, almost a third of that maximum payday. So if I really wanted to, I could let this go down to a certain amount and then maybe buy it back and then use that money into something else. So a lot of things we can do here. And then, like I said, when we get to 1 o'clock, guys, I'm going to get into this in some more detail with you, both myself and our head of research for Rocket Wealth, which is Jeff Beamer. All right. So how about some Q&A?
Yeah, I was excited for it, and I've been scanning the chat for the last 20 or 30 minutes, and people seem to have a lot of questions, but they also say that you do a good job answering the questions and kind of explaining things just as you're talking. So here, we got this one that just came through from Speedway Johnny. Is there a statement from the Fed that's already priced into the market and will not spook the market?
Well, Speedway, that's the $1 million question. Can you answer that question? Eric, can you answer that question?
Sir, I can.
Let me just tell you this. Between the language that we hear from the Fed, from Chairman Powell, all right, who I think the last thing in the world that the Fed chair wants to do is derail what he's been doing, which has been walking on eggshells for the past couple of years. But yes, inflation is it's a real thing. All right. That's the first thing. The second thing is that we all know that, the Fed has postured to where they're going to be raising rates 3 to 4 times this year. Now, if we go over that, that could be a negative for the market. If we stay at that, or we do something a little less, that's positive. But I believe a lot of this has already been built in, and you can see that by way of what the market's done in the month of January. We'll see at 2 o'clock, though, won't we?
We will see at 2 o'clock. And we have another question coming in from Kika? I'm not sure how to say it. Sorry. But can you please look at DWAC? Is it possible that it may go up or cut losses now?
You know what? I don't know if I can look at DWAC. And the reason I don't know, I'm going to find out right now. Wow, we actually can. Look at this. Now, I'm looking at DWAC, and you're probably going to say to me, why do you have such little data on DWAC right now? Because you probably have it so much. You probably maybe even bought it at a higher price. When I look at charts, and this is for, I believe it's Kika, and everybody else out there for sure. This is for all of you. When I'm looking at charts, I look at optional stocks. Now, options were made available for DWAC back at the beginning of the month. So that's why I have such little data here. The other reason why I laughed a little bit about DWAC is my wife went in and bought some. And, I got to tell you, kudos to my wife. She is one smart lady. All right, and I'll tell you why. She bought DWAC, and then she bought it again when it was down in the 50s. I think she's probably maybe a little bit up on this. She's using it as a hedge against what's been going on in the markets. And I got to say, it's not the worst thing in the world to do because, when you see the markets going down for the month of January, DWAC's actually been up. The second thing is that, and I say is because she also went out and bought Bitcoin. And she didn't buy it when I bought it. She bought it over the weekend when it was cheaper. So kudos to my wife. Maybe I ought to get her to do these shows because she actually has a better buy price on Bitcoin than I did here just recently. But to answer your question, obviously that's kind of about your personality and where you think it's going. What little I see on this chart here is that we have a higher low and a higher high. And usually when you get a higher low, higher high, higher low, that could come with another higher high. I don't understand this company, honestly. I don't understand it. And I don't have patterns. I don't have enough data for patterns to make a clear, to give you any kind of a clear indication of where it's likely to go. Or any kind of predictions. That's about the best I can do with this, Eric. It's because of the lack of data that we see in front of us.
Oh, I appreciate, and I think everyone appreciates the honesty that you give right there. And about your wife bringing on the show. I mean, she may have bought Bitcoin less than you this time, but I mean, you've been mining this stuff, and you've got mountains of Bitcoin back in your safe.
And
there.
she's always gets it from. I don't say it. I mean, I'm better. I'm smarter than that. But a lot of the family members, every time we get together, somebody just a jabber goes, "Hey, remember when you had that Bitcoin machine, Tom, and your wife made you get rid of it?"
Hopefully you got enough out of that machine before you got rid of it.
I did.
Tom.
Yeah.
Right.
Because we went from it being too much on electricity to now she doesn't talk about it.
Oh, of course you won't talk about it now. How about this one from Ready 9629 space 6 series? Tom, how much, and I like this question, how much cash do you need in your trading account to take advantage of the Rocket Trading program? And this is a lot of people have this question about all the different services. Like, how much do you need to be able to be effective?
So it's not a day trading service, and you don't need $25,000 because we're not doing 3-day trades or more per week. But it is not going to be cheap. But I'm going to tell you that. I'm going to say one more thing. So the John Deere trade, let's just take a look at it one more time. All right, how much would this end up costing to put on the trade? And I'm going to say it's going to vary between broker. All right, because if you got a great relationship with your broker, and if your broker understands that you manage risk, they might cut you down on what the cost is going to be to put one of these on. But if I'm going to sell one of these John Deere options, and that's an option to buy 100 shares of stock, and that 100 shares of stock at $364 is going to cost me $36,400. I've got to come up with roughly 20% of that in order to sell the put. So that particular trade is going to cost around $7,000. But, and I say a big but here, we teach our subscribers every Wednesday at 1 p.m. how to cut that cost, how to cut that risk, and how to keep that probability down by another factor of maybe even 5. So we're going to show everybody today how to take that John Deere trade, and now it's not going to cost that $7,000 to put on. Maybe we can get that down into the hundreds of dollars, and that's exactly what we plan on doing. And so it will go from thousands of dollars to hundreds of dollars. So maybe that helps you, determine if I take a trade in something once a week, okay, if I'm actually putting a trade on once a week, and then if it's something between 30 and 60 days, I'm kind of going way out there. But let's just have an idea that you're going to have a handful of trades on at any one time, because some will come off because they're going to be exited, and others are going to go back on. And if you do that and you think about that, how much would you actually need? If you're just going to do the Rocket Wealth trades, exactly, that cash secured put selling trade, you're going to need a few $1,000s in your account, easy. All right, you're going to need something in the neighborhood of a $20,000 to $30,000 account. But those of you that join us at 1 o'clock, and every one of our Rocket Wealth members gets access to the live stream. We're going to show you how to take those thousands of dollars of cost and risk and bring those down to hundreds of dollars on the exact same asset. So we're going to talk about John Deere at 1 o'clock. We're going to talk about how to make this how to shave the cost, how to shave the risk, and keep the probability. We're going to do that we look to try to shave those by 80 to 90% off of what just selling the put would be.
Yes, and I mean, I'm going to be there with you at 1 o'clock. I'm going to put a phone number on the screen in a few moments as well for people that are not part of the service and want to be there at 1 o'clock. But we do have another question, and with 3 minutes left, I think we have enough time to take a look at it. It's from WNNR, winner one. Tom, do you still like Engine?
Engine coin, absolutely I do. An engine coin wasn't one of those coins where we're just kind of buying it and to turn around and flip it in another 30 or 60 days. That one's a buy and hold. I like that one. Obviously, it's gotten to be much better pricing, but I still like the concept. I love the overall functionality of the coin, and yes, I still do like that coin.
Cool. And because you had such a quick answer there, I could probably sneak in another question here as well. Let me bring myself back here. And yeah, how about this one? When you say we can buy back the stock, does that mean we now own that stock? That's coming from a member.
Okay. Yeah, no, I think what we're talking about is buying back the option. So if you sell an option, like this one that is the John Deere option, the way to reverse that trade, when I say buy it back, you sell this to open the trade. You're selling that contract. And if you sell that contract for $3.60 and it goes down, and right now it's trading for around, let's call it $2.30. Buying low and selling high, everybody understands. If I buy something for $1 and I sell it for $2, I just made $1. But if you sell something high and buy it back low, do you realize you just did the same thing? You just did it in reverse. That's what we can do as part of a put selling strategy, as part of Rocket Wealth. And a lot of times, if we get a trade, let's say this John Deere trade, we're coming into February. So we're coming out of January, coming into February. If this trade goes down to where it's trading for 50 cents, for instance, and we still got another month or month and a half before the expiration, we may elect to buy this back to close this trade out, take that profit, that 80 to 90% of what we brought in, and then that frees up the cash, it frees up the margin, allows us to go in and take advantage of other trades. And so we'll do that if something goes our way very, very quickly and we just don't see any possibility of getting that stock at that low price, but it's still going to tie up all that margin. We'll buy that thing back and put it into something else that we can make, because that last 50 cents, that last 35, 50 cents of this 360, that's always takes the longest to get. A lot of times we may just pull it out and put it into something else and then, sell dollars, buy cents. That's what we do with this particular strategy. So I think we are done for the hour, Eric. First of all, I want to apologize to everybody if we did not get to your question. We try our best to do as much as we can on the Q&A session, and we're going to try to expand that a little bit more in our coming sessions. Premium subscribers, grab yourself a coffee, get yourself something to eat, get a quick break. I'll see you and Eric in the members only room at 1 o'clock. For everybody else, we're going to be doing next week, right? We're going to be looking back at cryptocurrency again at 11:30. So 1 o'clock, you got me. 2 o'clock, you got Kenny, 8 baller in the Fed. And we'll see you soon, guys. Bye, everyone.